Now we are talking about control accounts. Okay. Now what is it? Do you know how many types of ledger do we have?
Um, 4 types.
Hmm.
Miss, are you sharing your screen?
Yes. Do you know how many types of ledgers do we have?
4.
Hmm.
Sales ledger,
Hmm.
purchases ledger,
Hmm.
and nominal ledger, and I think cash book.
Okay, fine. Cash book is a journal as well as a ledger.
Yeah,
Nominal ledger is also called which ledger?
general.
General ledger. Okay. In sales ledger, what account do we keep?
Um, the trade receivable account, customer's account.
It is called the customer's account, debtor's account, or we say we keep the trade receivable account. Okay.
Yeah,
Similarly, in purchases ledger, what account do we keep?
trade payables, supplier's account.
We keep the trade payables account, suppliers account, or we could say they are the creditors account. In the nominal ledger, we keep SLC and PLC. I am talking something which is related to control accounts only. Other than
Hmm.
this, we keep accounts of all expenses, losses,
Incomes,
income,
gain.
and gains. Okay. Now
Yeah.
understand one thing. What happens is that in accounts, ledgers are maintained by different person. Say I have a person A, he will be responsible to keep the sales ledger. I have a person B, he will be responsible to keep the purchase ledger. And I have a person C who will be responsible to keep the general ledger. Okay. In the
Hmm.
sales ledger, I make the customer account which looks same to same like the SLCF. Sales ledger control account. What is it called?
Sales ledger control account.
That means the customer account resembles exactly. It is the replica of your sales ledger control account. But the only difference is this, that the customer account is kept in the sales ledger, which is maintained by the person A,
Hmm.
and the SLCA is kept in the general ledger, which is maintained by the person C.
Oh, okay.
Okay, these
Yeah.
two accounts are maintained by two different people, but they look exactly the same.
Hmm.
Okay, the accounts look exactly the same. The account has the same information, same details. The only difference is that this is maintained by another person, this is maintained by another person.
Hmm. Okay.
Why do I do this?
So that both
That if
both.
this one has done some mistake,
Yeah.
I will come to know from here.
Yeah.
And if this one has done some mistake, I will come to know from here. So both these accounts should exactly be equal to each other. Their balances should be the same. If the balances are not same, that means something somewhere has gone wrong. So you have to control the errors, and that is why it is called a sales ledger control account. Okay. So this is
Hmm.
a replica account, a memorandum account. It is not a part of double entry system because a part of double entry is this. This is just maintained separately. Control accounts is prepared in the general ledger, and it will give you summary of all your debtors and creditors. Debtors are what?
Debtors are trade receivables, customers,
And trade receivable accounts resembles which account?
sales account.
SLCA. Okay. The
Mm.
trade receivable or customer account resembles which account?
SLCA.
SLCA. What is the full form of SLCA?
Sales ledger control account.
Okay. And the creditor's account, which is a supplier account or trade payable account. It resembles what?
PLCA.
What is the full form of PLCA?
Purchase ledger control account.
Yes. Customer account is maintained in which ledger?
SLCA.
Mhm. Customer account is maintained in which ledger?
Oh, sales account.
Sales ledger.
Sales ledger.
SLCA account is maintained in which ledger?
In general ledger.
General ledger. And both these accounts look the same.
Hmm.
Similarly,
Yeah.
supplier or trade payable account is maintained in which ledger?
Purchases ledger.
And PLCA?
In general.
And both these accounts look the same.
Hmm.
What is the advantage of preparing same accounts but by different people?
To help look at mistakes, like if one
Help
person made
locate
a mistake.
errors, to prevent frauds,
Yeah.
okay, and to locate any missing items from incomplete records.
Hmm.
So you will learn these advantages. It will help you to localize errors. It will help you to prevent frauds. It will help you to find the missing items from your incomplete records. The limitation of having control account is that sometimes the control account itself contains errors.
Oh.
Okay? Sometimes the person who's making the control account itself has errors. So how will it check the frauds?
Hmm.
And another thing is that control account will only verify arithmetical accuracy. That means it will only tell you about the maths addition and subtraction accuracy. If there are
Oh.
compensating errors or other errors, that is not located by control accounts.
Hmm.
Okay, you've already seen the format of the SLCA account, which resembles the customer's account and debtor's account, correct?
Yeah.
An SLCA account normally has what balance?
Debit balance.
Below that,
Credit sales.
everything else.
Sales return and debit. I mean credit.
On the credit side, there is a full video to explain the format. You just need to know the format, and keeping the format in mind, you can solve further. Okay.
Okay.
Now, for purchase ledger control account, it resembles a supplier account. Supplier account or your trade payable account, right?
Yeah.
Suppliers have what balance?
Um. Credit balance.
Suppliers have a credit balance. So the normal balance of your PLCA would be what?
Credit.
Credit side. So this is your normal balance. Normal balance on the same side.
Hmm.
Okay, credit balance. And this is the closing balance which will come on the opposite side. This we are talking about the normal balance. Are you with me?
Yes, miss.
Trade payables has a credit balance. Below that you will have credit purchases.
Okay.
Below that you have three unusual items which is called dishonored checks, interest which is charged by your supplier if you don't pay on time, or some
Hmm.
refunds that your supplier has done.
Yeah.
Dishonored interest refund. On the other side, everything else that is related to the supplier would come on the debit side. What is that everything else? You have purchase
Hmm.
returns, Cash bank would be the money paid to supplier. If you have received any discount, this is only the cash discount. If there is a contra entry, what do you mean by a contra entry? Your
It,
customer and your supplier is the same person.
okay.
So you set off the amounts between them. And you are a good person, so you will never give bad debts. Okay? These are the common things that we are talking about. Now, sometimes a purchase ledger control account can have an uncommon balance, can also have a debit balance. Suppliers normally have credit balance, right?
Yeah.
But why can a supplier have a debit balance?
Mm, if the supplier is also a customer.
No. Suppliers normally have credit balance. Credit balance means I have to pay.
Yeah.
Okay, it's a liability. I have to pay.
Mm,
There are times when the supplier can also have a debit balance. Debit balance means I have to receive.
yeah.
When will be a situation where you have to receive from your supplier?
Um, we received.
Maybe we return goods after account is settled.
Yeah.
That means we already paid him the money. We already settled the account. But after that, we return the goods.
Hmm.
So maybe we return the goods after we settled the account. Then your supplier can have a uncommon balance, a debit balance.
Yeah.
Okay. Or maybe you have overpaid to your supplier. Okay.
So, Miss, what about sales ledger?
Same thing. Your customer returned the goods to you after the account is settled, or your customer
Hmm.
overpaid you. We learn these two things and we keep it same, constant.
Okay.
But this uncommon balance, they should specifically tell you.
Yeah. Okay.
If they tell you only, then we will treat it as an uncommon balance. Otherwise, our accounts, we will always treat, if they've given the balance, it will always treat as normal balance.
Okay.
Okay? Are
Yeah.
you with me?
Yeah. Yeah.
Now keep the two formats in mind with you and try this sum of yarn shake. You have to prepare PLCA, you have to prepare SLCA. What you will
Hmm.
do is, over here, you will just write whether it comes in the PLCA or SLCA and which side.
Okay.
This is PLCA which side.
Credit.
So this is PLCA credit side. So if you see PLCA credit side,
Hmm.
balance breaking down. Can you see this?
Yeah.
Now SLCA, which side?
Debit.
So SLCA debit side. Yeah? Now
Yeah.
sales ledger control account, 1750 is the balance begin down. And this is an uncommon balance of 100.
Uncommon. Okay.
Okay? And they
Yeah.
specifically mention to you that this is an uncommon balance. Are you with me?
Yeah.
Okay. Now the purchase journal. What does the purchase journal give you?
Um, debit in general journal.
Purchase journal show you.
It shows you trade payables.
Purchase journal means purchase day book. The total of this will give you credit purchases. Yes?
Yeah.
Credit purchases. PLCA has what balance?
Debit balance.
Darling, SLCA has what balance?
Oh, credit balance.
SLCA has debit balance. PLCA has which balance?
Credit balance.
Below that, credit purchases. Okay. And in SLCA below that would be credit sales. Are you with me?
Yeah.
Okay. So this sale purchase journal, credit purchases will come where?
In the PLCA.
Which side?
Below. In the credit side.
You with me?
Yeah.
Okay. So this will come in PLCA credit side. Come on. Sales journal. What does the sales journal give you?
Credit sales.
Will come where?
In the SLCA.
Which side?
In the debit side.
Okay. Yes.
Yeah.
Now everything else. Over here you can have only dishonor interest refund, dishonor interest refund. Everything else would come on the opposite side. Come on. Purchase return journal will give you what?
Purchase returns give you credit.
Purchase returns.
Purchase returns. Yeah.
Where will purchase return come? Opposite side. What I will do is, this is the normal side, I'm highlighting it for you so that it's easier for you.
Yeah.
Yeah. Everything else comes on the opposite side. Sales return. Tell fast.
Sales return journal records sales returns.
Where
And
will
it's
you
on the SLCA credit side.
See this?
Yeah.
Come on. Check receipt from debtors. Debtors will be SLCA.
Yeah.
And,
Trade
credit,
receivable.
and PLCA would be suppliers or creditors. Okay. Check receipt from debtors. Which account? SLCA, PLCA?
Check received from debtors, SLCA.
Which side?
Debit side.
See, debit side will have only balance, begin down, credit, sales, dishonor, interest, refund. Nothing else.
The credit side.
Everything else opposite side. Similarly, in PLCM, on the credit side, you will have opening balance, purchases, credit purchases, dishonor, interest, refund. Everything else on the debit side. So this is
credit side.
On the credit side. Check paid to suppliers.
PLCA.
Which side?
Debit side.
Okay. Check. Yes?
Yeah.
Okay. Check paid to debtors in respect of overpayment. Please be careful. From debtors. Debtors is who? Debtors is whom? Your customers?
Yeah.
From customers, you receive money or you pay money?
You receive money.
to receive money. So receiving money from your customer is a normal thing.
Yeah.
But here you are paying money.
Hmm.
So when you pay money to your customer, what does this mean?
Um, it means it'll go in the PLCA.
Darling, when you receive money from your customer, it is normal. Your customer has to pay you, you will receive. But when
Yeah.
you return back money to your customer, I'm repeating again, when you return back the money to your customer, that means you're doing a refund.
Oh,
So this 100 represents refund.
so credit
Refund
side?
by credit side.
Of
SLCA
the
is what balance?
debit
Below that,
sales,
credit sales. Below that,
credit sales,
below that,
credit sales,
and below that is on
bank refund.
interest refund. Yeah,
Yeah.
dishonored interest refund. So this is refund. You will write bank and in the bracket you will write refund. Are you with me?
Yeah.
Discount allowed.
PLCA.
Discount is allowed to your customer
Oh, SLCA.
and discount is received from your supplier.
PLCA.
SLCA. Discount allowed will be SLCA which side
Credit side,
and discount receive
debit side.
PLCA debit side. Check. It is
Yeah.
just a format chapter. It is just a format chapter. I'm repeating again. Bad debts.
Bad debts.
SLCA
SLCA.
debit side. Because SLCA has a debit balance, opening balance debit, below that credit sales, below that dishonor interest refund. Everything else that is related to your debtor or your customer will come on the credit side. Do this sum. Try doing this sum. Then we'll do the closing together.
Okay.
If you will see a purchase ledger control account, the credit side will be more. You will write both the things on both the sides, the total of the credit side. From that, you
Yeah.
will deduct the three totals that you have. You'll get the balance closed down as 2005 and you will bring down the balance. It's like the normal closing that you do. Okay.
Hmm.
Similarly, in SLCA, your debit side will be more. You will write it on both the sides, find out the closing balance, and bring it down on the next day. It's just like the normal closing that you do.
Yeah.
Doing it, if you're stuck, let me know. This is the sum of October, November 21. Okay, Aisha is a sole trader, and we are supposed to make the SLC account and PLC account.